Let's talk to a man whose company manages more than $200 billion in assets. Well, Andrew Milligan is head of global strategy at Standard Life Investments, and he joins me now live from Edinburgh. Andrew, thanks for coming in. I just wanted, first of all, to get a sense of how difficult it is to predict these markets. I mean, we're just hearing, Goldman Sachs ranked very high, but it only got 38% of its calls right. What do you like day to day? Has your job become much more difficult in the last 2 years?
It certainly are very volatile market conditions. I mean, these are some of the most interesting, fascinating of my 30-year-long career in the city. I'd say we rely on several sources for research. The first, of course, is internal. I actually lead a team of 8 or 9 people, so we do try and carry out as much research as we can internally. And then we also have an independent research budget, so we actually go and pay for independent consultancies to give us the answers to the questions we set them. Last but least is really the Wall Street consensus. With all respect to the companies you've just mentioned, in certain areas they are spot on. In certain areas they probably try to sell us their own products. And that's why it's rather important to have your own lines of research so that you can analyse exactly what you want, not just what the city or Wall Street is telling you is the order of the day.
Now, Andrew, as head of global strategy, what worries you the most? I mean, today we have a lot of earnings. We also, see a possibly sluggish recovery, if no recovery at all here in Europe, because it's so laden with debts, and now we see this possible currency wars between various countries around the world.
I'm reassured by everything that I hear on the corporate front. We should be getting 20–25% per annum earnings growth into the autumn of this year, and that really supports the corporate sector, and we've got to discuss where that cash is being put to work. And that's one of the issues we're talking about in our Global Outlook Quarterly, which is available on our website for anyone who wishes to see that. The issues that worry me are the policy errors that could disrupt that corporate cash flow and cause confidence in senior management to dive. So certainly currency wars could be one, but behind that there's issues about whether or not the authorities go too far with quantitative easing. That's the big issue which many investors are worrying about at the moment. And then whether there are some hidden problems. For example, we all rely on China at the moment for being the locomotive of the world economy. Are there hidden problems there related, say, to commercial property, which will cause some unfortunate policy decisions to have to be taken in that country?
So given all of this, Andrew, give me a snapshot of your ideal portfolio. I mean, which assets look the best valued or the less risky at the moment?
Well, we go back to that corporate cash flow, which is very positive indeed, and I think investors do need to get access to that. We've been saying for many months that we think corporate bonds, credit, are the best way to access that because the volatility is lower. We're pretty neutral on equities, therefore, but really prefer corporate bonds. You can pick up income because some investors obviously do still need a good income, and I think you can pick that up through, for example, some high-yielding credit, commercial property as well. Pretty neutral now on government bonds and beginning to sell because they're getting a bit expensive. And of course very light cash because interest rates will be low for a very long time to come.
Andrew, thank you so much. Andrew Milligan there.